Markets look calm, but the risk is still there. And traders are starting to price both sides. Ray Watterson here. We are seeing mixed signals across the board. Yes, there were violations in the Iran ceasefire, but the overall tone turned slightly optimistic by the end of the day. And that shift matters. Oil staying below $100 is supporting risk sentiment. U.S. indices managed to close higher, and Eurodollar reacted quickly, pushing up toward the 1.17 level. But here's the problem. The bond market is not buying the optimism. Yields remain elevated, and that tells us inflation concerns are still alive. So while equities and currencies are stabilizing, the underlying risk has not disappeared. Let's break it down, starting with euro to dollar. To the 1.1680, that level remains critical. Even though easing geopolitical pressure supports the euro, strong inflation expectations and upcoming CPI data from both Germany and the US are keeping the upside limited. Technically, Eurodollar is trading inside a resistance zone between 1.1680 and 1.1720. As long as price stays below that area, the upside remains capped. If we see a rejection, the key support to watch is 1.1625. A move below that could shift momentum back to the downside. But if price breaks and holds above 1.1720, that would open the door for a stronger bullish continuation. Now let's move to oil. Brent is struggling to break above the $99 to $100 zone, and price action is starting the day relatively calm. But the situation is still fragile. The Strait of Hormuz is not fully open, which continues to limit supply. At the same time, ongoing tensions and the risk of stalled negotiations are keeping traders cautious. From a technical perspective, the structure remains supported. As long as price holds above $93.50 and $96, pullbacks are likely to stay limited. On the upside, the first resistance to watch is $99.20. A break above that level could bring the $100 zone back into focus. Bottom line, markets are stabilizing, but not relaxing. The optimism is there, but it is fragile. And the bond market is still signaling caution. Stay focused on the levels. If you want clear, no noise market breakdowns, make sure to follow. This is Ray Watterson.